One more before the break, and that is Time Warner. Like that name, Time Inc. has of course been around a long time. But understand, what we're talking about here with Time Warner is basically a content company. The Time Warner cable business was spun off a few years ago, interestingly. But this company, which owns Warner Brothers and the extensive movie empire that's linked to that and the content, and HBO, which of course owns Game of Thrones, let's not forget that one. I'm wandering here a little bit. That company, this company, Time Warner, is in fact in merger and acquisition talks with AT&T, one of the largest US phone companies. So you can see, again, trying to do that. But as far as it goes, not a deal done yet. So Time Warner has got a 76.8 billion market cap, price to earnings ratio 18.83, dividend yield of 1.62. Let's go share price. You can see how well the content, again, is being valued here.
Yeah. It's got good content. It's also got CNN in there.
Right.
Now, that's an interesting one because CNN's been doing quite well.
Surely that's worth minus dollars?
Well, it's been doing quite well recently, funnily enough, perhaps because of the huge controversy it's had with Donald Trump particularly.
Yeah, the more he accuses of them being fake news, the more people watch.
That's correct. And the advertising front done reasonably well.
Yeah.
But it's not just CNN, it's the whole Turner Communications side of things.
Yeah. And
that's actually a good operation. So look, from the content perspective, this is actually a great company, and you can see precisely why AT&T, which has got the backbone, wants to get together with this thing, and that will produce a formidable competitor in that space.
Because HBO, which stands for Home Box Office, is the production company that owns Game of Thrones, and that means that when you buy a entertainment package on the US, you get and you pay for HBO and ESPN and all these other things. That's how you get to watch the new stuff that's coming.
Yeah.
But that money is flowing back to this corporation. Cartoon Network they own as well. In the movie business, they've got some of the most cherished properties, like, for example, Harry Potter, Lord of the Rings, the DC Comics series. So that means Batman and all of that kind of stuff. Every time they make a new one, that's additional revenue. So you can see how they can spin that out into a variety of very valuable properties along the way. Okay, do you think the merger between AT&T and Time Warner is going to happen?
Look, I think it may. Logically, it makes an awful lot of sense. It really, really does, for all the reasons we've espoused up until now, Paul. The regulatory side of things may be the problem.
Taking a hell of a long time.
It's taking an awful long time.
It's opposed on the hard left of the Democratic Party, as well as on the sort of right of the Republican parties. So it's almost as though maybe just if those two parts can shut up, we can proceed with this thing. Because general evidence has shown that big companies getting together and doing vertical integration deals is not worse for customers.
Yeah.
It actually, in some instances, is better for customers.
Yeah, and as we said before, you've already got these other large companies that are doing, in certain instances, a good job, but perhaps not as good as it could be. So a big competitor like this would probably be able to put a lot more pressure on the likes of Comcast, for example.
Exactly, that's a good point. Exactly, pursuant to our conversation. Right, so we're going hot on Time Warner?
I'd go hot on this one, yes, from a fundamental perspective.
Yeah, and if the deal closes, that of course could be further beneficial.